The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. This is the Thursday edition, Thursday the 5th of February. And thank you for a good few hours, great hours with John and Steve. We're going to be going right on after me with Larry Pesavento. We got full house today. Oh, full house today, but you know what? Tom O'Brien, where is Tom? Tom is at the World Money Show in Orlando. You can go say hello to him there. I personally will be doing the 2 hours, 3 o'clock till 5 as well. My pleasure, my honor to be sitting in the guest host chair. And so let's go through the numbers. We've got the Dow up. I love this. The Dow is up 151. Yesterday, like 30 or 40 minutes before the close, it was up 110. Then comes out Greek chaos. And I said to my subscribers to my opening call this morning, I said, hey, is the United States the stronger of the two when it comes to United States internal energy, stock market energy I'm talking about, and Greek chaos? And my suspicion was that we would continue the up move today. And we are, in my opening call, we are mostly long. We had two shorts. We got one short left. One was stopped out really quickly for about less than a 1%, less than a 1% loss. It was either going to work or it wasn't going to work. It was on bad news involved with that company, a very strong company, but it's really not good news, and I suspect it is going to impact them negatively later on. However, the other short position we have is a sector short, and so far it's still doing okay. Now, what we're looking at is a situation where if you look at my three charts that I've got right here, if you're looking at Tiger TV, you will see, this is what I show my subscribers every day, and I show them the E-mini, whichever the current futures contract is. This is the March contract, the S&P E-mini, trading at 2,053, up 23, up 1.15%. It's even stronger than the Dow and the S&P. The Dow is up 152 at 17,825. I said we've got to get through the 17,790s to 17,820s. Well, we're attempting to break out at this particular point, but we've broken the downtrend line, and I make a big deal about trend lines. One simple trend line, if you learn how to use those, can be so informative. So the Dow right now is up 153 at 17,826. The S&P cash is not up nearly as strongly as the futures. It's up 17 at 2,058. So the Dow's up 0.88%, and the S&P is up 0.83%. So you can see the futures are anticipating a little bit more in the enthusiasm. You've got the QQQ series. At this particular point, the Q's at 103.47, and I said over 103.20, 30s, that's going to be really important for the Q's. Actually, as I do this, why not? Let me just do the charts at the same time. It's still the same three patterns that we're looking at here. This is the 120 minutes. I just made that a leg B to the upside. It went to a lower low, so this has to be leg B. Can't be any other notation. Can't be an E, because 17,243 was the last buy signal in the 120 that went to the peak D. Those peak Ds, let me tell you something, they are formidable, especially in the 120-minute charts. What do I mean by peak D? Oh boy, I shouldn't have said that. Now I'm going to have to go there. I will go there. Let's go right to that, if I can find it. And let me just go to, oh boy, I shouldn't have. Yeah, okay, it's fine. There we are. This is a peak D. Let me show you right now, sliding along. In the Chapman wave, what you do is you identify the lowest low bar and you merely count each successively higher peak, and you label them leg A until it makes a peak. Then it's leg B until it makes a peak, and then leg C until it makes a peak, and then D. D is your objective. Why? Because at D, other things can happen, but your objective is to get from the lowest low bar to at least the fourth highest peak, and that's D. uppercase letters on the way up, lowercase on the way down. So what have we got now? Let me move that away. And what we've got is that in the Dow Daily, this was a leg D, and then it made a peak D, a trough D. Remember, on the way down, they call troughs, at 17,037 on the 2nd of February. It then ran up really sharply, and it's broken the downtrend line. It broke it yesterday, but with that bad news from Greece, it pulled back sharply and went under it. Now it's using it as a support level. And what is it? It is the trend line support is 17,680, somewhere around there. Okay, and we're at 17,824. So this is superior action, but it's the weekly chart that is so important to me, because look how beautifully it's accelerated. The price is accelerated up, even though the technicals are really way behind. But the 120-minute chart is very bullish at 95%, and the MACD is good. It's leg B. It should still go to 2 higher peaks in the 120-minute chart. Will we finally get? Let me move this down here. Will we finally get in the Dow a leg D above 18,103? I think we will. But the irony of the whole thing is that the diamonds are only at peak B, and they'll be going to a leg C above the previous high. And the S&P needs to go above 2,093.55 to start leg C. It's very close at 2,058. I mean, it's 40 points, 37 points. It's not a big deal under other circumstances, but this has been a really choppy market. But when you've had so many false starts in the Chapman wave buy signal that fails, this is the one that says there's a really good chance that we should go to a higher high, and it won't be A minus. It'll be an A that pulls back, and then you start leg B. If it takes out 2093, that's going to be a big test to see whether it has the kind of staying power in whatever leg it is in the daily. And what does it mean in the weekly? Because for me, it means that the weekly has gone to a C, and it should still go to a D. And that says most of February is going to be towards the upside. What would negate that? Just a sudden blowout to the downside, like we've had every other time that we've had these leg A to the upside, A's to the upside. And that means you would break under 2020 in the S&P cash. So let's go to the QQQ. The comp index is up 33 at 47.49. The QQQ has a trend line that needs to break. It's already broken one. But this trend line right here is really important. That would be at 104.30. That's quite a bit away now, because it's at 103.52, acting very nicely. The weekly is improving because it's making a cup formation, and the monthly says, ho hum. What pullback? I mean, I've held the 9-period moving average. What are you fussing about? Amazing how that works. Now let's go to gold. Notice to the IWM right here. IWM is in leg D. It's a little bit further along in its waveform, but it's not doing it even close to the all-time high of 121.41. It's at 119.55. 2 points. Might not sound like a lot in a stock that's trading at 119.57, but believe me, it's been really tough for it to do. But everything about the pattern at this particular point says, if by tomorrow afternoon at 4 o'clock, Friday, at the close, the IWM is able to hold this gain, preferably have another little bit higher to try to tag that line at 120.40, that would be really positive action, and that would turn that stalk leg formation in the monthly chart from a leg to a body. It would say the neck above 121.41 is liable to begin. And in the 120-minute chart, we've got A, B, C. We're in leg D. So it says, hey, we've got to be a little bit careful here, just a very short term, because it's starting to bump into an extended position in the 120-minute chart. There's no signal. It's just saying, hey, we've got to be a little bit careful. And now I'm going to go to the I wanted to go to the VIX index right here. See, the VIX is down at 16.73. Everything about the pattern that I'm looking at in the daily says there's a chance it's going to try to tag the 1554 level. If it takes that out to the downside, 1453 is next. But if it uses it as a springboard, we will start to see the Dow's having a tough time making that break of just a couple of 100 points, 300 points to go to an all-time high. we're going to watch this real closely. So far, everything does look very, very good. But I'm going to also mention another thing. Steve Rhodes has got a webinar coming up on the VIX index. I introduced folks here at the TFNN 10 years ago or more to the volatility index, and to me it's been just an absolutely beautiful technical tool. And I know that Steve, whenever he finds an indicator that he thinks is worthwhile, he delves into it and he comes up with historical data that is really pertinent. So he's got this webinar coming up very soon. Now, talking about webinars, one will be introduced today. It'll be online very soon today. And it's just for subscribers to the Chapman Wave, to the opening call, my service, my daily service, the opening call. What it's going to do is going to talk about the parallels of the 1920s and to what we're looking at now in the socio-economic political spectrum, but more importantly, how the chart of the 1920s is just beginning now to match the chart of 2015. Or let me put it this way, how the chart of 2015 has just gone both emotionally and technically, besides all those other considerations, into a match with the 1928-1929 period. So it'll be a webinar on the 19th of February between 6:30 and 7:30. It's free, Eastern time, that is, free to subscribers to my opening call. There'll be a way to do it if you aren't a subscriber. There'll be a way to get on. And all of that will be announced on the front page of TFNN. I just wanted to introduce it now because, to me, I've waited a very long time to do this webinar. And I'm very positive. I'm actually a very positive person, but there's a reality that you have to face. And how things unfold are going to tell us about whether this is going to be a parallel match with the top of 1929. I'm not actually predicting it. I'm saying that we're going to be looking for icons. There is a match. There might be a price-time match. We'll discuss that. All I'm doing is I'm going to introduce you to the concept that all good things often come to an end. But is the end tomorrow? Or is the end mid-2015? Or is it in 2016 or beyond? And those are the questions that I'll try to answer. So check it out. Now, let's go to the gold. Gold itself, I've considered gold just in a sideways consolidation. The weekly chart is still very positive. The daily chart is really struggling to hold it. It's a descending triangle. If it takes out gold at $12.61, down only $3 right now, holding very tightly. If it takes out $12.50 support, watch out. It can have a real quick test of the 1246 9-period exponential moving average of the weekly chart. But the weekly chart so far is holding well. The monthly chart is the one that gives me all the clues and says, yes, for gold stocks, we should still go higher over the next month and a half, 2 months or so. But right now, we're having a digestive phase, and I'll look at the dollar and other things when we get back. Basil Chapman, Tiger Traditions Hour, Dow's up 135. I'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rose, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. So let's just look at this. So gold has made this arch pattern, a double arch pattern, actually in the 120-minute chart. It says, hey, it better turn the 1255 area into some kind of support. And at this particular point, it's also just suggesting that what's going on in Europe is not turning gold into a currency of fear. And in fact, what's very interesting is if you put this together with the dollar has tried to rally, but it too is doing the dollar and gold, funnily enough, have traveled in the same direction. The TLT is the one that's giving a hint to say, I too am traveling in the same direction. I too am having a high level consolidation. Bonds should be way lower, but with the Fed still there as a kind of a backup, it's saying that the yields, I don't think I've got it here. Oh, I don't. Okay, let me get rid of this. Let me show you something here. It's very interesting. Close the workspace, save, go to the other workspace, recent workspaces. That's my long-term, not the 1929 versus 2008. This is the long-term chart. You will see that we've had a little bit of a turnaround, actually quite a bit of a turnaround from the low of the 30-year yield at 22.26. We're now at 24.24. That's a 10%, 2 points. That's a 10% 10% rally in the yield itself. So it's suggesting to me that we could have another kind of an arch formation right here in the yields. I'm going to be watching this real closely because a little later on, we might find that we get to a recessionary move where the yields, the 5, 10, and the 30-year start to do their little fancy crossover, and we get yield inversion. We get a bunch of things going on. We haven't got it yet, but it's something that I'm going to be watching, and that will be where we get our real first big decline in the Dow. But that seems a little bit away right now. So, so with that in mind, let me just do two things. One is I wanted to finish the EUR/USD, was trying to have a bit of a rally. It's holding nicely so far. I wouldn't even call it much of a other than a bounce. It's at 1.142. It would need to get to I would say it needs to break to 1.53 to 1.54 to really show that it has the tenacity to be able to move to challenge the 9-period exponential moving average of the weekly chart at 1.17. That's quite a way away. So it's finding some kind of a bottom here, meaning that the dollar is finding some kind of a top. Yields are finding some kind of a bottom. And bonds are finding some kind of a top. I'm calling them short-term just at the moment. We'll see what happens. Why? I want you to know what happens when the Dow gets above 18,103, if or when, and the S&P breaks to a new all-time high. Let's go to Joe in Boston. Joe, how are you?
I'm well. How are you, Basil?
I'm very well, thank you.
Yes, I wanted to take a look at Procter & Gamble. I'm in the money on some options for July. And we had quite a pullback here recently, and I'm wondering what you think.
When you say you're in the money, you had what options? Put or call options? Put options.
July 80 calls.
You have the calls. Yeah, okay. So you have the July 80 calls. They've had a nice run from just below 84. So, folks, we're looking at Procter & Gamble. PG is up 53 cents, up at 86.32. Now, I'm taking this particular peak D in the Chapman Wave monthly chart quite seriously in the sense that Procter & Gamble is a defensive stock. Now, defensive stock is not Raytheon or GD, what is GD?
General Dynamics.
General Dynamics. It is a defensive, meaning that in times of high volatility, very often fund managers say, hey, I don't need this. I'm going to go to the stocks that invariably produce a dividend, and they hold up pretty nicely in volatile times, and that would be Clorox, Procter & Gamble, that area. However, the pattern that I'm looking at here seems to have produced a Chapman Wave stalk formation with the leg, the body, the neck, and the head, and now the beak forming to say, in the monthly chart, having broken under the previous high of 85.82 back in November of 2013, even though it's now higher than that, but it did break below it, says that's a tip-off to say, look at your shorter positions, shorter time frames to see what the pattern is, because the V-shape, inverted V-shape pattern up and down has the look of that Eiffel Tower that I talk about, which is where you go straight up and then straight down, and you've got to see where it stops on the right side. Now let's look at the longer term monthly chart of Procter & Gamble. That peak, that A pattern, uppercase A pattern, Eiffel Tower that I talk about, was one that it had from October of 2013 to early 2014. So can you hold on through the break?
Yes, I can.
Okay, I'll be back. We're talking with Joe, and he's got the call, so I've got to be very careful about how I analyze this. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back, and we're back with Joe in Boston. We're talking about Procter & Gamble. Now, this is a little unusual. If Joe said to me he was long Procter & Gamble, I would say as a counter-trend rally, that's fine. But what I would do is I'd say if it closes at any point over the next 3 days underneath 85.30, instead of pushing into the, that's still a long way to go, 87.21, well, maybe not, 87, instead of pushing into the, at this point this is 86.40. If it doesn't close into the 86.80s today or tomorrow, and by Monday it's pushing into the gap on the upside above 87.21, then I would say that you should just be raising your stop on some part of your position. But here's call. So the call option is for February or March. When is it for?
July.
Oh, that's right. You told me July. You see, if you have the July, I actually feel the same way, because if this market is going to find, and I just mentioned to someone in the den, they asked about Facebook, and I said, no, Facebook's not acting well at all. I just don't see anything there. Money's flowing into the heavy cyclicals, like the autos, like the auto parts, like the steel, like aluminum. This is very different. Now, your Procter & Gamble fits into another category altogether. So if we're looking out, then I would say to you that because of that ugly candle with the gap down last week, and I'm not sure if that was earnings, currency related, what it was, but the fact is it's an ugly candle in the weekly chart, and it's saying the best case that I can see now is a test. You'd love this, of course, a test of the 88s where the 9-period moving average is. But all I'm going to say to you is this: because you have calls and it goes out to July, yes, you have time. But I don't have to tell you that 1.5 to 2 points lower, and then you start to see the premium shrink quite a little bit. Right now, the premiums, you're not getting all that much on the upside, but you're definitely not getting all that much on the downside because it's so far away. But once it kicks in and the price gets closer to the premium, that premium will start to move quickly. So this is my thinking here. If you have a profit at this particular point, if you're able to take off at least a little bit from the position, now you're listening to me and you've already taken the trade and you're making the money, so I'm the one that's coming in here and interfering. But you asked about my conjecture. My conjecture is that it is not in the favored area right now, in the favored sector. The defensive stocks, I don't think I think it's more these cyclical, heavy-duty cyclicals that are doing well. I know from our portfolio that this is the area that's working. Now, what I would say to you is you could raise your stop to maybe 85.90, and if it breaks 85.90, you take a little bit off of your position. And that position that you would have taken off, use it as a trading stop of about 50 cents right now. And for every 50 cents higher that the price moves, just raise your stop on that part of the core position that I'm talking about. Now, the core position, I don't really want to interfere with that. I just want to micromanage just for a little bit because I've got peak D in the 120-minute chart. 89 is the 9-period moving average, way higher. It looks very tough to get to. And I just don't want you to get stuck, because if Procter & Gamble takes out the low of 83.68 at any point in the next 2 to 3 weeks, that's really going to suggest that that monthly chart has a target in the 81 to 79 area. So I hope I'm wrong, and that's why I wanted to say one part of your option position, I would have some kind of a stop on it so that I lock in a profit, maybe use some of that profit as a little bit more leeway, but that 85.30 area to me is really critical on a closing basis. So you want to see the gap. You want to see by Tuesday of next week, you want to say, oh, Basil was completely wrong. Look, we've even made an island gap up above 87.21. And that'll say, you know what, it's going to fill most of the gap and try to get to the 88, maybe even the 89 area. I don't think, by my eye, that it's going to go, if it rallies, that it's going to go much above 88 to 89. You wouldn't mind that at all, right?
No, that would be good. In fact, actually, what I did was I had a larger position, and I did dump half of it at 90.
Oh, so you? Oh, okay. All right.
So this is the second half of my position that I hung on to. I mean, frankly, I wish I had sold it all, but I didn't. So. Do you mind? I want to talk about another aspect. You know, I do this every year, about 3 times a year. I get to do this. I'm going to use this moment now. When you were in a position, whether it's a losing position, actually it's more a losing position, but even if you're in a position of really good gains and you give back a chunk of it, the psychology completely changes, because until you get back to that level, every gain is not anywhere close. It's kind of disappointing. And certainly a loss is terrible. Yeah. So the psychology to me says, you've already done the best thing. You took off half. I didn't know that. So you're kind of fitting into what I was talking about by taking some to reward yourself. I'm going to make the suggestion that a quarter that is left, use the trading stop exactly the way I spoke about it. And all I can say to you is that this position, under no circumstances, must take a loss. Right. Okay.
But you've been there before. You don't want to do that again. This is the position that says, I don't want to make this mistake again. I want to get out of it and say, phew, that was a lesson learned. Next time I put in stops, even if it's options, it's really tough with options to do because the percentage is so quick. percentage gain and percentage loss is so quick.
Right,
So,
exactly.
So the strategy is a little different now. Now what you want to do is to resume your positive thinking.
Yeah, okay.
Okay. Good.
All right,
Well, at
thanks
least
so much,
you're
Basil.
back. You're doing okay. And as I said, I think it's not quite in the area of the real big moves now, but it could have a balance and it could have another 1.5 maybe or so. I would just use a trading stop, just keep raising it and take off. Hey, a profit is a profit. And even if it goes to 105, if you've made money, that's good enough. It means that you have a good technique and you will just refine the technique a little bit more for the next time.
All right, thanks a lot, Basil.
Thank you very much for calling. And hey, congratulations for it working out now. Thank you for calling. So a couple of things I promised I subscribe. No, these are people that have just emailed me and want to know. AG was a question that Dave wanted to know about. And I said to Dave, I see AG, which is First Majestic Silver, trading at 6.32. It's holding very well. If you have the position, I'd be watching. If it closes under 6, I say be careful because the weekly chart has 588 as key support. You don't really want to see that because it means it's making lower lows and lower highs, even though it's just within a contained trading band. Wide percentage, but very small price because it's such a low price stock, trading at 630 right now, up 5 cents, 6.30. But the MACD is not that good and the stochastic is poor, but the weekly chart is holding very well. Very much like a number of gold stocks, even like GLD, holding well in the weekly chart. Shorter term, just it's problematic. So all I'm saying is if you're long, what you want to see is 650 to 655 taken out on the upside. I would say preferably within the next three trading days, but you don't want to see $6 taken out because it says, hey, I could have a quick pullback to 588. Still the weekly is looking good underneath 570, and I'd say be careful because the low of 566 is really important. Takes that out, and then I'll have another opinion based on the horrible monthly chart. But the weekly chart is actually improving a lot. The 120-minute chart says, hey, don't worry about me. I'm just consolidating off a very big percentage gain below from the 440s all the way up to over 7. That's a huge percentage, so I need time. So that's that. The next one was Paul asked me about CY. CY is a stock. It comes up, Cypress Semiconductor, it comes up very often as something that people have been looking at, talking about. I don't know what it is about the stock. It's trading at 14.32, down 19 cents. Now, I happen to think that the last peaks in the daily were peak E and F, and that this is that double camel hump, a pattern in the, call it an M-shaped pattern in the stochastic that fails. So I'm watching it real closely. I do have it in a peak B in the weekly chart, and that says, hey, it should go to a C and a D. But if I base it on the weekly chart and a single leg A up, I have to watch out carefully because those single leg A phenomenons have a way of pulling back, and if they pull back just mildly and they go into leg B, that's really positive. Just as the weekly chart should be very positive because the MACD is good and the stochastic is at 90%. So, yeah, I don't know if you were long or if you were thinking of a short or anything like that. I can't remember. But as I'm looking at it right now, I think it needs to consolidate a little bit longer. If it closes under 14, that's a heads up to say, hey, the consolidation could last quite a bit longer. If by Monday to Tuesday of next week, it's holding well and it goes back over the 9 EMA of 14.58, that's going to be very positive. That's going to be more positive. Very positive is a push up to 1488, and it's at 1431. 50 cents shouldn't be a big deal, but it's in an area the SMHs have really been struggling. They're doing okay, but I'm watching the monthly chart really closely because if the weekly takes out 5150, it's at 5404 right now, the SMHs, Market Vector Semiconductor ETF. That's going to suggest it could, that 5167 level on the 9 EMA in the monthly is going to be really critical. You would expect that this is a time for it to move higher. So let me just go back to CY and show you something that's very interesting. In the weekly chart, I'm able to put in that pattern that I often do, and that's the oval formation. And it's real simple. If 1339, the low of the week of the 23rd of January, is taken out for whatever. I don't care what the reason. If it's taken out, that means it's going to really struggle to push higher after that. But if it's holding, this pattern says you can go on for another 2-3 weeks and then just have a sudden push to the upside. So I'm watching the parameters closely. At 1433, it's got a point down. If it breaks that, not good. But boy, if it breaks a point higher and goes to the 1530s, that 1548 level will, I'm pretty sure that'll be taken out. So those are, would I buy it or would I sell it? I would do nothing right now. I just have a little bit of patience. Why? I think you'll have enough time to go long if it starts to move higher. And it's not participating in this market. The S&P and Dow are up 0.80% or more, and this is down 1.10%. So it's just not participating, so it's off my radar right now. Next question was DR Capital. Now, I got a couple of things. Oh, boy, I got a whole bunch of stuff, but I can't actually take time to look at it. Oh, I want you to do something else. GPK. Now, this is a packaging company, and packaging companies tend to lead the market very often to the upside, and they lead the market to the downside. This is Graphic Packaging Holding Company. I wanted to show this. It was brought to my attention by someone, and I'm not going to discuss their part of what it is. I'm only discussing it as a chart formation. However I count this, everything about it seems to say it is in leg D in the weekly, in the monthly. The 9-period moving average hasn't been broken to the downside more than twice since it took out the 9-period exponential moving average back in October of 2011 to start the new buy mode, ABCD, recycles with an instant restart and goes ABCD again. This is the third buy mode. And the third buy mode, you've got to start expecting something else is getting closer. But a monthly chart means closer. It could be 2 months, 3 months, who knows? Okay. But the weekly chart is the one that's gone. I believe this is a C. I'm calling it a C for now. I don't have any evidence to say that it isn't. And that suggests that the high that was made today of $16.14, and I was expecting a leg D. In fact, this is on my radar to talk about for about 3 days. And I kept saying it's a peak C and it should make a D. Well, today it made the D. It spiraled. It opened up at $15.14, spirals up to $16.14, and it's trading now only at 51 cents. I say only, why? Because that was a huge move to the upside, and it's at $15.20. But the high that was made for peak C was $14.95, 35 cents away. So 25 cents away. And that says that so far, this spike must be news related. Maybe it's earnings. I'm not sure. But whatever it is, I would say that this stock is, and I mentioned this to the person who emailed me. I said, hey, this reminds me of Joseph A. Banks. Everybody remember that? I spoke about it for years and years, and I said, nobody ever talks about this. They sell, you buy one tie, they give you 3 suits and 5 pairs of shoes. I mean, it's just I don't know how they ever made money. And then they got bought over by Men's Warehouse, I think it is. So that was an unbelievable chart. If you just held that one stock from the lows of 2009, actually it was the lows, I think, of 2003 or something, you just had to have that one stock and you'd be off to anywhere. I mean, you'd be looking good. And it was at all-time highs before the Dow went to all-time highs. It was just an amazing. Well, this stock has told us that from the low of 2009 with the 2 little doji candles back in February and March down to the 57-cent level, this thing has just spiraled up, used the 9-period moving average as a springboard. It walked the 9 EMA until just recently it ran. And I get a little nervous when a stock starts to run away from the 9 EMA, especially the monthly. But the weekly chart says, hey, I've still got a little bit of room to go. I'm going to retest in about a week or two for leg D. I'll be right back. Dow's up 167. S&P's up now 17. Be right back.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. The Futures Hour, next on TFNN.
Hi, folks. We're back, and we were still finishing up with GPK, which is Graphic Packaging Holding Company. Leg D in the daily. That says that the leg D in the daily is giving back quite a chunk of it, but it would suggest to me that if it's able to hold the low of $15 today to the gap high of yesterday, $14.85, if it's able to hold in that area, and by midweek next week, today's Thursday, yeah. Midweek next week, it's able to get back into the 1554 to 1588 area, then it should take a week or two and it should start to move higher and to go to leg D. Now, at this particular point in the daily, it's kind of accomplished everything it needed to. The weekly is the one that says, hey, I still got some room on the upside. It's just interesting that it is moving, and it's moving so well, even though the price is only at $15.19. When I looked at the chart, I did all the analysis, and then I looked at the price and said, what? It's only at 14 at the time. I couldn't believe it. So anyway, it's looking good, and there must have been news today that helped it. So now let's do some things, because we've got Larry Pesavento coming up, and I'm just about to wrap up. I'll be back this afternoon, 3 o'clock to 5, to do Tom O'Brien's show. I'm really looking forward to that, because it'll be close to the close of the day. We want to see where the Dow closes. It doesn't give things back like every other day. We're going to watch this real closely. So here we are. On the Dow, what's really important is that it's broken out, and I believe that this is the brand new leg 8 to the upside. It's easier to see in this particular chart pattern. Look at the takeoff from the October the 15th low of 15,855 in the Dow. It just went. Look at those beautiful candles, those long candles, those very strong candles to the upside with very few black candles or doji candles. Look at the takeoff that was made on the 16th of December when it just went to a single leg A up. And look at those beautiful candles. But look at the two candles that go up and then fail that started from 17,262 and then again at 17,243. We're not seeing that. It was really important. That's what I said in my comments over here for my subscribers this morning. We want to see a new recovery high above yesterday's high. That'll be really positive. So far, this is very positive and suggests that we could, in fact, try to test the 17,990s to the 18,100s in the next 3 to 5 days. Let's hope that's the case. I prefer bull markets to bear markets. Now, that's that. And the other thing I wanted to talk about here is, just before we wrap up, is that the VIX index is pulling back at 16.74. If for whatever reason Friday at 4 o'clock or even Monday it goes into the 18s, goes above 1825, that'll suggest, hey, I've not yet pulled back enough. I'm still very nervous. There are a lot of nervous people. Not me. I'm saying the people are very nervous, fund managers, and they're buying the VIX for security. At this point, they're selling the VIX. The VIX going down into the mid-teens, into that 1554 and 200 period exponential moving average. That would be a target for me if this rally is to continue. And that weekly chart is looking very poor, as is the monthly. But the week's not finished, and neither is the month. It's just begun. So I'm just saying that right at this particular moment. Now, a couple of things that are very important. GE was failing, but now it's having a very strong day. It's up 33 cents at 24.49. Boy, yesterday made me real nervous, being long and all. But the fact is that it's acting well now, and it says that if GE and UTX, which was doing okay, at 119.77, I should mention just for clarity that we are long. UTX. Now, I wanted to get an option call on this, but I just did. The price wasn't quite right. It's a pity because it's done very well, but it just wasn't what I wanted to do. I like them very cheap, and it wasn't cheap. So this is very important. My two leading indicator stocks are doing well in my Dow quartet of GE, IBM, UTX, and Triple M. So far, so good. Now, the only other thing is that I'll be back at 3, between 3 and 5. And now check out this afternoon. Check out the front page of TFNN. You should see a description of what's coming up for a webinar for my subscribers on the 19th. I'll be back this afternoon.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.